Business owners, it is officially time to file your taxes for the prior tax year. And today, I want to provide you with some guidance to make sure that number one, your business is compliant with the tax law. And number two, you avoid unnecessary tax penalties while doing so. As a licensed CPA, I talk to business owners every single day to help them legally avoid taxes. And many of the people I talk to are completely unaware of the tax information they need to file their business tax return, or the specific tax return they need to file based on their business entity type, or when those tax returns should be filed and what to do if they think they are going to be late. So today I'm coming out of my cave to address these topics to help you prepare for a smooth and easy tax filing process that ultimately saves you money and reduces your stress. So if you're interested in that, then stick around for this full video. And also, if you are a business owner that wants to work with me directly, then consider applying to become an exclusive client of mine at mycpacoach.com. All right, so let's start with the tax information you need in order to file your business tax return. Now, the most important information would be your accounting records for the prior tax year. This is normally summarized in a profit and loss statement, which clearly shows all of the income your business earned and the expenses you incurred to earn that income. Now, this is important for two reasons. Number one, the IRS requires you to keep up with your business records. And number two, this helps you claim more deductions to lower the amount of tax you are legally required to pay. Now, in regards to record keeping, the IRS says that you can choose any record keeping system of your choice. So whether you're using QuickBooks, spreadsheets, or shoeboxes to keep up with your records, that's your business. You just need to make sure that you have records that clearly show your income and expenses. And this is critical because you can miss tax deductions without this information. This is because the business expenses on your tax return typically qualify as tax deductions as long as those expenses are ordinary and necessary to operate your business. But you don't have to take my word for it. Just take the IRS's word for it. They specifically state that you may forget expenses when you prepare your tax return if you do not record them. And as a practicing CPA, I see my clients missing simple deductions that end up costing them thousands, literally thousands of dollars more in taxes simply because they did not keep up with their records. So if you have not done this for the prior tax year, start doing this before you file your business tax return. You can spend your own time doing this or hire a bookkeeper to help you prepare your books. Either way, not doing this at all typically costs you more money in the long run. Now, let's move on to the second major topic here, which is filing the correct return for your business. Now, filing the wrong tax return for your business can result in your return being rejected by the IRS. For example, if you elect S Corp status for your business, but you end up filing a return as a partnership or sole proprietor, your tax return could be rejected, and vice versa. If you elect S Corp status and file as an S Corp before the IRS actually approved your X election, then your return could also be rejected. So it's important to get this right to avoid any unnecessary stress, confusion, and penalties. Now, with that said, let's quickly identify the correct tax return right now for your business, and then I will tell you what to do if you think you're going to be late on your return. So first of all, if your business is owned by one individual and is not a corporation, then you will use Schedule C on your individual 1040 tax return to file your business return. Now, this return is technically an individual return with a schedule that allows you to report income you receive as a single member LLC or sole proprietor, which is just an unincorporated business. And since this return is technically an individual return, then you would have until the individual tax deadline to file your return, which is April 18th in 2023. Now, if your business is owned by two or more individuals and is not a corporation, then you will file a 1065 tax return, and that is due on March 15th of 2023. So this would apply to multi-member LLCs, which is just an LLC with multiple owners, and general partnerships, which are just unincorporated businesses with multiple owners. And the last group to address here would be corporations. If you file as a corporation, the number of partners in your business is irrelevant. The only thing that matters is the type of corporation you file as. S Corps file Form 1120S, which is typically due on March 15th, and C corporations file Form 1120, which is normally due on April 15th if the corporation's tax year is ending on December 31st. So those are the tax forms and due dates, but what happens if you are going to be late when filing your return? Let's talk about the tax penalties that may occur and what you can do to avoid them if you know you're going to be late. So in general, if you are filing your return late, you may be assessed penalties. And there are two primary types of penalties. Number one, a failure to file penalty. And number two, a failure to pay penalty. Now, a failure to file penalty is exactly what it sounds like. A penalty for not filing your return by the due dates I just provided. Now, if you cannot file your tax return by the due date, then you can apply for an extension. An extension will typically give you an additional 6 months to file your return without being assessed a failure to file penalty. So, for example, if your return was due on March 15th, then you would have until September 15th to file your return without being assessed a failure to file penalty. Therefore, if you think you will need more time to file your return, then you can ask your accountant to file an extension for you to give you more time to file your return. Now, the extension will save you from being assessed the failure to file penalty. But this is very important. It will not help you with the failure to pay penalty. The failure to pay penalty is a penalty for not paying your taxes on time. So look, even if you file an extension and need more time to file your return, that extension does not apply to the payment of the taxes you owe. So basically, the IRS still wants their money on time, even though they are giving you more time to file your information return. Therefore, you should still make your expected tax payments by the tax deadline, even if you are going to be late on the actual filing of your return. And in many cases, you should have been making those tax payments anyway during the tax year as quarterly estimated tax payments. But I will save that for another video, which I will post on my division's new YouTube page, My CPA Coach. So if you want more in-depth guides on specific tax information, make sure you go ahead and give that channel a subscribe as well. But again, if you are going to miss the tax deadline, file an extension to avoid the failure to file penalty, but still submit your estimated tax payment on the original due date of your return to avoid the failure to pay penalty. So hopefully this information helps you go about filing your business tax return. As always, thank you for watching, and I look forward to seeing you in the next episode.